Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network on location, actually thanks to the folks at BASF for the great use of their tent during one of their field days taking place here in Nebraska. Interesting, great to say the least. You know, we've got a couple ugly days that have happened in this market trade. It doesn't matter if you're looking from the grain or the livestock perspective. There's a lot of concerns that are out there. Brad Kooima is joining us, and he's with Kooima Kooima Varilek out of Sioux Center, Iowa. And I have to start out with a statement that you made before we even started this program was the stock market is not the economy. And I think when you put it that way, I think there's just been a lot of panic feel as they look at this market and they compare it to, you know, their 401k, their agricultural operation, the concern about uncertainty, global recession, though, you know, we've had that recession conversation numerous times on this show. Let's kind of start there. When you look at it from a cattle perspective and you see how those outside market influences have weighed in on the trade.
No question. And thanks again, Susan. I enjoy this to have me on. And I don't mean to, ignore something that's real. I mean, at the end of the day, where the market closes, that's what's right for that day. We can sit here and we can argue with it and say that shouldn't have been, blah, blah, blah. But at the end of the day, that's the way it works. The market is always right. But, you know, I would want to take a little different tack, though, on this whole notion here that I understand if we have a big time recession, cattle market, right? Elastic demand, that's what it's always been thought to have had. So, you know, money gets tight. It's one of the things that probably people decide to opt for a different choice. Notice that the hogs aren't rallying. If we really thought that was happening, hogs are usually not only recession proof, they actually usually rally during those times. And last time I looked here, October hogs are down 215. So it doesn't seem like that's working out so much either. So tongue in cheek here a little bit, but we've been talking basically the worry about a recession since COVID, since the last election. And frankly, I'm getting a little tired of it. Most likely, like we've talked before, the Fed is a little bit behind the deal. They wait too long to raise the rates to slow inflation, and now maybe they've waited too long to lower the rates to try to stimulate the economy again. Hopefully that's the next news you hear, right? That, okay, we better get this thing going again by lowering these interest rates. So while it's real, for sure, I would say 2 years ago we had a break just like this in the stock market, and we recovered, much like I would expect we would this time as well.
So is cash up for grabs this week? I mean, is there any sort of definition leaning to what we might see?
It's Wednesday, so, you know, it'd be a little bit unusual if we had a lot of cash. And I always feel like basically the longer it takes to get cash cattle, usually the better off we are. Now, but there's been some indications because some of us, at least like me, the fundamental guys are saying like, well, before we've had these shakedowns, and then, you know, we walk along the week and we go, well, we're very current. You know, you can try to buy these cattle $5 lower, but we're current. We can say no to that deal. And then at the end of the week, we end up, you know, getting these packers to come our way a little bit because we still have leverage. So that I believe in the North, we still have leverage. I don't know of a single instance of big cattle. In fact, very few cattle here weigh 1,500 pounds. That's how current we are. So yes. So the old cattle that I have some influence on, what I have on my show list, I've been bid 193, and now just before the show was on, I was bid 194 by a regional, same regional that I got 198 from last week. So yeah, they're trying lower, but so far it's not working great for them, and I'm not in a hurry on a Wednesday either. So some of the auction markets today were a little firmer than yesterday, with some conventional cattle bringing up to 195. We'll see. The South hasn't blinked yet. They're asking basically steady 188 to 190. I think if you get the futures just to straighten out a little bit, it would, you know, restore the confidence in the feedlot manager too. That say, well, we can take a couple dollars lower, but we don't have to break it $8, $5, $6, $7, $8 in 1 week. So we'll see. I'm a little more optimistic on the cash than most. I think we might be able to get 95 or 6 in the North, and maybe someplace close to that 88, 89 in the South.
You know, we've had these couple of ugly days within the trade, and this too shall pass. We've had that conversation numerous times, but then that comes the question: is this how we're going to see going into next week? I mean, we're into August now. Our grilling opportunities are becoming less. Some have concerns looking at this overall market for not only cash, but just the futures trade.
Right. What ought to be right now, Susan, is we ought to have this little sweet spot here where we're having Labor Day demand. Getting the beef set up for the last big beef feature push for a while, and the beef market though isn't too bad. If you noticed, beef market's fared pretty well, so the packer margins have to have improved some. I don't know that they're windrowing it, and most would tell you that they're supposedly losing money, but so yes, you've got a seasonal problematic deal where typically after Labor Day, you would generally see the market break a little bit. There is an exception. Remember 2014. By the way, in 2014 we had about a $14 future sell-off in August. Right now, October's broke about $13.60. How about that for a little bit of coincidence? And then to only have you come roaring back yet in 14, of course, and still make that rally. So I think the key to the thing is can you avoid this black swan influence? Even, okay, so last Friday we had that bad unemployment number, right? Stock market broke. And then over the weekend, Japan's stock market, really took a dive, partly through nothing that had to do with the American economy, right? So then we had that big wreck on Monday. Now we're trying to straighten it out and come back a little bit. There seems to be a little maybe more encouraging news from the Fed. So I would rather talk about average weights and what the packers are bidding and what all that stuff is. I'd love talking cattle fundamentals, and now I'm talking something that's not even close to what my pay grade is. So I think if we calm down the outside influences here, the market will hold. We're still at a huge price. I mean, right? We know that, right? So to get these corrections and stuff from here should not be unexpected.
So at this point, as we get ready to wrap this up, do we not and should not be compared to, as you put it, last year's horse in this market trade?
Well, I do think there's a fair bit of influence right now on people's 12-month memory. They were going like, holy balls. Do you remember last year when feeder cattle broke $50? Yeah, I remember it. I'll show you my scar. It started with the October cattle on feed report, and then just absolutely fell out of bed. And I think there were some other things working there. One of them is the LRP thing, but that's a whole nother topic. But so the traders go like, wow, we don't want to have something like that happen to us again, do we? So I think that's part of the problem. That part of the problem is too that the CME thinks there's somehow in their wisdom that we should have a $9.25 daily limit in the feeder cattle, which is absolutely ridiculous. It plays into the playbook of the HFTs and the algos. Does nothing in my terms of being a market, establishing price, but whatever. So I guess I couldn't help but think, sometimes I use that phrase, don't use last year's horse in this year's race, as a smart aleck comment, but I guess I'm using it as a hopeful comment this time. I mean, the reason that the market's different this year than last year, I don't think there's any reason why we should think that we ought to break that way on the feeder cattle. We can correct, and we have, and the cash feeder trade has started to correct too. But I guess I don't think it's that slash and burn type of deal like we had last fall.
Great conversation as always, Brad. What's the best way for folks to get a hold of you?
The phone is 712-722-0023 or kkvtrading.com. Thanks for having me.
Thank you. That's been this week's Cattle Call. Quick reminder, commodity futures and options do involve a substantial risk of loss, not always suitable to all investors. We're on location this week, and that's been the Cattle Call right here on the Rural Radio Network.